Be sure and smile.
Yes.
I always do that. I'll wake my face up. Hi there. Welcome to Springboard Your Biz TV. I'm excited today about my guest, Shane Bender. Shane Bender is going to be joining me to talk about cash flow. Shane is the founder of Bender CFO Services and the author of Forecast Your Future, How Small Businesses Exchange Stress and Chaos for Cash and Clarity. Shane, welcome to Springboard Your Biz TV.
Well, thank you, Evan. Glad to be here.
Yeah, absolutely. So Shane and I can't remember exactly how we met, but we have had lots of different conversations over the year, whether that be from writing books to, helping out with my wife's company. I know she had some questions, and you've always been that person I know I can go to, regardless of the size of the business. And I know there was also some really cool trainings that you did and learnings whenever you were launching the book that had a lot of key information on there. And I think, the reason I wanted to have Shane on is because he can speak to the whole business maturity model thing, right? When people always ask you, what is it that you do? How do you work with companies? It's kind of hard to say because I have to learn about their business. I'm sure You're the same way.
Yes.
We got to figure out what stage of business they're in. So, we put together a model where we have the small business, just startups is more of the inception. Somebody who's been around for a couple of years, they're more of what we call survival, meaning they're making some money, but, they're definitely looking to grow. Then you have the growth stage, which is where you probably get around 10 employees or 10 strategic partners who are working directly with you, and you got to share some knowledge, some information. And you really start to manage this thing called cash flow that starts to have a huge, huge impact. So, again, thanks for joining us today, and I'm looking forward to learning from you a little bit more. So tell us, what are some of the things that you experience the most, and how do you kind of guide people when you start working in those inception or survival type stages?
Yes, and that's where most of my clients are, as doing fractional CFO services. It's generally going to be clients from startup, 1 to 2 million is a really sweet spot to get started to 20 million in revenue. And that could be, that's maybe 50 to 100 employees. And there are lots of different things to look at. And I've written about that in my book here, but I will tell you that one of the first things that you have to do, that I feel like you have to do, is have a good forecast model. And maybe I just said something that you're not familiar with, but just you want to have a plan of action. And there's really 4 main things that I talk about in this book, but I talk about it in anything that I'm doing in fractional CFO work. Is you first have to know where your numbers are today. Like you need to have some semblance of accounting, a P&L, a balance sheet. You need to know your numbers. And that means not, one of the challenges I've seen is businesses not knowing their numbers until they have to file their taxes. So let's just say, take this year for example.
Yeah.
They gave you an extra month to file your taxes, so now they're due like on May 17th or something.
Yeah, I'm still scrambling.
So,
right?
but you could file an extension, and you got until the fall.
Exactly.
Well, what if you don't know how you did in 2020 until the fall? I mean, how in the world can you manage your business and your cash flow if you wait that long?
Yeah.
So I encourage businesses to get your financials done the following month. Just recurring, stay on top of it.
And they need to have some type of bookkeeper in order to do that, right?
Yeah, bookkeeping, and it's not that expensive. I mean, I understand when you're in a startup mode, inception mode, that may seem a little expensive, but QuickBooks has some pretty easy ways to kind of get started and just stay on top of it. But it doesn't take long before I would recommend you just paying a bookkeeper, because there are some of them that are really inexpensive.
They are, and I'll tell you, most of the companies that I go in and I coach that are in those lower ends, when I ask them if they know their numbers, they'll spend a week getting their numbers together. And I'm like, okay, that's a waste of time. Yeah, that's why we don't do this. I'm like, no, that's why you get somebody else to do that.
I had an example of a client that they want basically one of another person in their city wanted to sell their company. This is not even the Dallas-Fort Worth area. They're out west Texas.
Yeah.
And the first thing you would ask if you're going to buy a company is, can I see your financials?
Yeah.
Right?
See the balance sheet.
Can I at least see the balance sheet, the income statement? They didn't have that. And that was the first thing I asked for, because I was going to help with some of that. And I literally just got the financials this week. And so they've been trying to compile them for the last 2 months.
Yeah.
How are they running their business?
Yeah. So first thing, obviously, you got to have something, right? And I think that's what you talk about. You got to at least know where you stand today.
Yes, that's
right?
step one. And but we're talking about cash flow.
Yep.
But not just where your cash is today, because you could just log into your bank account, and I guess that tells you where your cash is today. But not a good way. Problem number 2.
Yeah.
Do not run your business by your bank account. Do I need to say that twice?
Yes, you do. Yes, you do.
Do not run your business by what is in your bank account today.
Yeah.
Because let's just think about all this money the government's been giving businesses.
Yeah.
And I have a perfect example of a client where I've been working really hard to help them with their cash flow. They've got both PPP loans. They immediately took this last amount of money, and they did some good things with it, but then they just spent it on some things that were not. I don't know. They didn't run it all by me. I wish they would.
They weren't necessarily a need. They were more of a want.
Something like that. And so the problem is that when you want to build a good forecast model, and that's really the second tenet, is to understand your financial destination and where you're going. And that's what I do immediately when I go and work with businesses. I have this whole book. We talk about building a forecast model, trending out your profit and loss, understanding your revenue and where all your revenue is, and then trending that where you're headed. And then it doesn't stop with the profit and loss. You got to understand your balance sheet. You got to understand other variables in your business, your billing and how long it takes to collect, let's say.
Right.
Or inventory could be an issue. Or maybe you need to buy
some
some
of
capital.
those are not predictable, right? I mean, there's a lot of clients out there where you send them an invoice and it's not like they pay it when you put that it's due.
Yes.
They pay it when they have the money.
Yeah.
And so you kind of have to prepare for that too as part of your forecast.
Yeah,
right?
you don't want to be down to the last penny. You need to have some ideas. I actually have a perfect analogy that happened, and I wish that I could show you this video, but last night in the Dallas-Fort Worth area, we had a bad hailstorm, specifically where my house is, which is in North Fort Worth.
Yeah.
And I got a little prop here of the size of the hail that hit my house. And it literally is this much. I measured it. In fact, it was a little bit wider than this, and it had spikes on it.
Yeah, it was
and
deadly.
It just
deadly.
It was coming down hard on my roof. I have never lived in a house. I mean, I've lived in North Texas for 20 years, and before that, in northern Louisiana, I just never been in a hailstorm where it was this big. It's usually like kind of pea size or smaller size.
Right.
But this one, yeah, you definitely wouldn't want to be
Not
standing
weapons,
outside.
Weapons falling
I
from
mean,
the sky.
it was making loud noise. and so, you have to have homeowners insurance. So you're going to get to file that. But I can file that, get a new roof, pay the deductible.
Yeah.
But what about your business? Now, you might have business insurance. That's fine to cover your property. But cash flow is your insurance for a recession, for a downturn, for a lost client, for a number of things that could happen. You don't want to be down to your last penny with no line of credit or anything, because I don't know if you've probably heard this saying before, because it's been around a long time. Revenue is vanity, profit is sanity, but cash is king.
Yeah.
I mean, at the end of the day, it's cash, right?
Yeah.
When the business runs out of cash, then they're crippled. And that's why when the whole COVID thing hit, that was one of the things they were scared about. All these businesses will shut down. They can't get back going. So they offered the PPP loans, the EIDL loans, the economic injury disaster loans, the now latest, the employee retention tax credit is something that many businesses can take advantage of. And that is helping businesses stay afloat. But it's not going to happen. I mean, they're not going to do this again next year.
Yeah, those types of insurance policies are one of a kind based upon what went on last year.
Yes.
So in lieu of some pandemic or some huge thing where the government comes in with some rescue or bailout plan, the only other plan you have is your cash flow.
Your cash flow, and that involves a line of credit, possibly. I mean, I would say any business should have a line of credit available.
So how about this one? I mean, I do a lot on the sales side, as you know, and we do forecasts, and we are held accountable by the CFOs. And you know, a lot of times you say, "Oh, our cash flow is low. Go sell some more." Is that the only solution?
I mean, no. There's many solutions.
Right.
Selling more and is good.
Yeah.
Improving your profit margins by you got your gross margin, you got your profit margin. So in a business that is selling product, let's say, so yeah, we got this chart here that shows your revenue that's the sales side.
Yeah, that's the one I'm always held accountable for. You know, people go, "What do you do?" And I'm like, "Well, we help you grow revenues." And they're like, "Can you be more specific?" Well, it starts with leads, and then it starts with sales.
Yeah.
And from there, we really have to test the market and see what's working, what's not working, which is what makes the forecast become so important, right? Especially as you start to grow. When you start looking at your business outside of you looking at your checkbook, right? And going, okay, how much money do I have? What can I do here? You know, in order to grow a business, there are investments, whether it's time, energy, or cash flow. And like you said, when you don't have the cash flow, the time and the energy thing is what really starts to kick your butt after a while.
You're right.
You're trying to hit that top line of revenue, but it's not always easy.
Yeah, the top line is, I think when you're in that inception stage, startup stage, it's really all about the top line.
Yeah.
I mean, at the end of the day, you're just trying to figure out how to have enough runway to survive. But there is a point in time when you get to that next phase where you then have to manage the cash flow. You want to start hiring people. You might have inventory. You want to check your margins, understand if you're making enough gross profit, so that in a situation where you do have materials or maybe a service-oriented business, you have cost of service. You need to understand what that is and what that gross profit percentage compared to your industry, and try to improve upon it through buying better or buying advanced.
Right.
I have this one client that they know if they can purchase a lot of their materials in advance, it's a lower cost, but it takes cash to do that.
Right.
You know, if you don't have the cash, guess what happens? They just find it wherever they can find it, and it's usually more expensive.
Yeah, I mean, there's no doubt that cash is king. It allows people actually a lot of times to even be a little bit sloppy with their decision making, if you will, if they are cash rich and they have been around for a while. So let's talk a little bit about some of those other businesses, right? The ones that are looking more towards growth. So they've already planned for and hired some employees, or they've got enough strategic partners to where now they've got to have some conversations, and they really do need a forecast, say, from sales, right? And this is where, in most organizations, a lot of the, in my opinion, bad habits start, where people say, okay, yeah, I got your forecast, but what number are you going to commit to? What is your gut telling you? You know, and then they get mad if you get a big sale that comes in. They're like, well, where'd that come from? How come that wasn't in your forecast? Well, sometimes you hadn't had the phone call yet. Sometimes the sale goes fast, sometimes the sale goes long. You don't really know, right? Because you've got these marketing programs out there, you've got these different things, but then there's also some people that are sandbaggers, and then there's some people that are just overly optimistic.
Yes.
So this is when the real issues start to come into play as far as how it's run. So how do you help organizations deal with that type of problem when they start getting into growth and expansion and need more accuracy, but it's not always, it's never 100%. It's a forecast.
Well, one of the things that one of my old bosses said before I started my business 5 years ago, we would forecast all the time, but we always knew the forecast was wrong. That you just have to get over the fact that the forecast will be wrong, and it's because we
That's
can't
a great
see
way
the
to look at it,
future.
because people just get so focused on this forecast, it becomes madness, right?
I mean, yeah, you do have a leeway to have an incorrect forecast, but that doesn't mean you don't do one. And there's a lot of reasons why you do one. And it starts with revenue. You were mentioning the revenue forecast, because you do have to first you understand what your revenue currently is, run rate. If you're in a service-oriented client, let's say, a customer, business, then you would be looking at your contractual revenue. You know, what have you already got on the books? Well, that's going to happen the following month, hopefully, unless you lose the client.
Right.
So you look at trends. But then on top of that, you're looking at your different opportunities out there. Have you started having conversations? Where are you in those conversations? Like if you're doing a proposal with somebody, then you're much further along than if you had the first phone call.
Right, right.
So you kind of need to just put that together and put some methodology around that.
Which is so cool, because that's where our worlds come together, right? Because then when you start to see that the forecast maybe isn't as accurate, and this person's forecast is sandbagging, this person's forecast is highly optimistic. For somebody like myself, who's a sales and business coach, I go in and I help those individuals with those skills that can help move those deals through faster, or give them more confidence, so that then when the forecast does come, it's a little bit better understood, right? Because there's process plus skill development that's delivered in order to help that. And that helps the business overall, right? That's how we work together, from the sales side to the financial side.
Yes, I work with a marketing firm, and they do get forecasts from many different people on their team. I would say when you're starting to get that second level of business, where it's 5 to 10 to 20 million in revenue, they're just going to have a lot more inputs with people providing you those numbers. And we would look at actuals, they would give us a forecast, say mid-month, and then we would look at actuals compared to that forecast. We did that. That's and I mentioned 2 of the 4 parts here.
Right.
The third one, which we won't spend a whole lot of time on, is about productivity improvements and having discipline, which there is some discipline related to cash that you need to do. And the fourth one is assessing and adjusting, which you have. This is exactly what that is. Every month you look at actuals compared by client, by customer, compared to what you forecasted. And if you have large variances, then you're not doing a good job forecasting, because you did this 2 weeks ago. You know, so it's just like, you know, so you kind of want to figure out how to improve that. And they have gotten a whole lot better in the situation of the next month. Now it gets harder as you get further out. So understanding how much revenue is going to come in 6 months from now is going to be more difficult. But you still put together that idea, and you just keep adjusting it every month.
Right, and I think that's where, so that's like really way down in the details, right? Mm-hmm. So now maybe open it up a little bit and give us some insight into the CFO, right? So now you're getting all this information. What does that allow you to do? What decisions does this data, when you look at it, what does that allow you to do?
Yeah. So chapter 21 in this book, and I don't know if, I want to make sure I don't forget to say this, that there is a free offer right now that for people that are watching this live, or we're going to do it through the end of April, which is tomorrow. Right. So April 30th, you can get this book for free, an ebook for free. But I want to tell you that one of the chapters is it's chapter 21, why you have a forecast model. What are the benefits? And there's 10 different benefits. I'm not going to go through all 10, but I'll tell you, it's just one of them. You can make a whole lot better decisions. Yeah. You don't want to make these decisions in the dark without any kind of thought around it, because then you get yourself in cash trouble. Yeah. So it's so that you can have informed decisions, and you can see what the forecast model will do is when you do these levers, like hire this person, or this is the amount of revenue and all the expenses, and you forecast it out, it'll tell you, well, based on this model, this is how much cash we're going to have in 3 months from now. If the cash is negative, that's a problem. So there's, you know, and so that helps you understand, wait, we have a constraint here.
So you could, in that case, in that scenario, go, okay, we could start looking at lines of credit. We could start looking at a business loan of some sort, right? And you would need your financials in order to go to a bank and talk to someone about that.
Yes, that's correct. And that goes back to the first step of having current financials, right?
Exactly.
So if you don't have current financials and you're starting to put that together, and you're like, I need a line of credit, or an SBA loan, or something bigger, they need all that.
So now, you know, just to let everybody know and kind of see, I think we're really getting behind the curtain a lot. How many times do you see businesses have to leverage that path especially when they start getting into the growth and expansion?
There's quite a few businesses that have to borrow money to get to that point.
20%, 50%, just from your experience.
I mean, I would say it's more than 50% have some kind of of borrowing, whether at least if it's a line of credit, which I actually go in there, and if they don't have a line of credit, if their financials are set up for it, I'm like, let's just get one, let's have it. You don't have to use it necessarily.
Right.
But when it comes to other things like SBA loans, which I've noticed more businesses doing that, then I probably have less than 50%, I'd say 20-30% that have some kind of SBA loan associated with it.
And next month we're actually going to be talking about business funding, and that's why it kind of rolls right on top of managing your cash flow and getting all of these pieces into place. So what are some other key things that you could share from the Forecast Your Future book that you think would be relevant to the audience?
Yeah, one of the things that I wrote in one of the chapters is cash problems. It's chapter 11 if you want to go straight to it, but it is a situation where everyone, you kind of might know to look at your P&L say you're a profitable business, and you're like, why do I not have any cash in my bank account? And this happens a lot where businesses only look at their profit and loss statement, and that doesn't always coincide to cash. I've
done this many times.
Yeah, so it could be a number of reasons. If a small business, they may, especially startup business, big danger of mixing personal with business or distributing money without any plan and taking money out of the business, and then that's where your cash is going.
Yeah.
Effectively, you're paying yourself,
right?
In some way or another.
You're paying those bills that just keep on coming every month, whether you like it or not. They just keep on siphoning the cash flow out, right?
Yes. I mean, it could be another thing. Maybe you're a larger business where you're purchasing equipment, larger like vehicles. Well, in that situation, it may not be hitting your P&L. It's actually hitting your balance sheet, and that's why I spend a lot of time on the balance sheet, because it tells you the answers to many of your cash flow problems.
Right.
One of the biggest things, and this is pretty low-hanging fruit for financial people, is just billing your customers. Consistently billing what you've done. Don't wait a few months to bill them. Believe me, your customers don't want that. They don't want an invoice for the last 3 months. They don't want to see an invoice from October. From 6 months ago.
They've forgotten all about that. They closed out the month.
They don't want that. So be consistent, and then also be good at following up. One of my clients, we had accounts receivable. It was kind of messy in the sense that there were invoices that hadn't been paid that were over 60 days due or 90 days due. I mean, they were just old, and that was obviously affecting their cash because it was due many months ago.
Right.
So the thing is we put together a plan. Said, well, once invoices get over 30 days, or once they get past due in general, send them an email, making sure they got the invoice. Because I can't tell you how many times that you've emailed the invoice and it went to the wrong person, or went to spam or junk or somewhere. I mean, it seems like it seems simple, but just that one thing helps.
Oh yeah.
And then once it gets a little bit past due later, you may have to involve other people on your team. You may have to go to say it's a service oriented business, and you've got a team that's working with that client. They may have to talk to their contacts, but you need a consistent approach there.
Yeah, it's good to have that open line of communication. I can remember when I was working at the Dallas Business Journal, there was a certain amount of time that went by that if you didn't get payment from the client, you got your commissions taken out of the next commission check when it came out. That got your salespeople interested in talking to the client about getting those bills paid as well.
Yes, it does help a little bit if you incentivize your salespeople around collections of cash.
Oh yeah.
Versus just sales. So I see the benefit of doing that.
For sure. So what are some other things, like what are different ways that people could get a hold of you, if they needed to work with you or they had more questions for you?
Yeah, that's a great question. My website's bendercfo.com. That I do have quite a bit of resources on there. We have blog
Yeah,
articles.
do you still have the training programs and the forecast your future downloads and all those things? You
Yeah,
still have those?
there is some resources through where you can find free templates that you can download. There are some courses that you can watch some videos. So there are other resources between the blog and between that. You could spend quite a bit of time on the website. It's been growing over the last 5 years. I just keep adding more to it.
Yeah, great resource, great blog posts, everything.
Yes.
Very well done.
But one of the things we've been offering, and I've been talking about more lately, is the financial assessment, which is an opportunity for, this would probably just require you to reach out to us and say you want to get on a quick call to talk to us about your business. And then if you're a good fit, we do a free financial assessment, and it's worth quite a bit. I mean, and to explain that is we'll ask for your numbers, we'll ask for your P&L and your balance sheet, and we will put that into our forecast model, and we come back later and give you an assessment. And it's probably worth I would guess it's worth $1,000 based on how much time we spend on it.
Yeah.
And we did that for free, and we talk to you about it so you learn more about what we do, and then we can talk about whether we want to continue services. But it's like I said, it's free, and I'd say 50-50, where some people just take the assessment, we talk, and they're just not ready at that time, and then other people are like, hey, I want to see this every month, let's go for it.
Well, thank you so much, Shane, for joining us today, talking a lot about your book and cash flow and how we can run our businesses better and be more successful. Don't forget that we do have a website at springboardyourbiz.com, and at that website right now, we're actually allowing people to join our community for free, and inside that community you're going to have access to these types of resources. So I was talking to Shane before the show. We definitely want to try and get him in there so that he can be available to answer questions that come up around cash flow. Obviously this episode will be on Springboard Your Biz TV, as well as inside that community where we share deeper dives, more information to kind of help us create a conversation to help us grow our businesses in this new environment. So, today's been an example of that learning that we take deeper in that program. At springboardyourbiz.com, we also have 2 group coaching programs that we're launching, and those each are limited to just 20 seats each coaching session. One coaching session is for more of your solopreneurs or the smaller businesses. The other coaching session is for those that are in the more growth or expansion type of businesses that need a little bit more support around teams and leadership development, things like that. So next month's discussion is going to be about business funding, and be sure to tune in. We'll send you an invite. We'll invite you to the next time we go live on YouTube. Thank you for tuning in today. We look forward to seeing you next month. And until then, make it a great week. Okay, and we're out.